What's up? What's up? So, I'll give everybody a second to go in, get in here. I know I kind of updated the stream late. Supposed to go higher. I was actually out and getting a phone. I didn't work. It's supposed to be in a paper trade. But yeah. So last stream of the year, been a pretty crazy year. In the crypto space, and then for a lot of people too, I think a lot of people got introduced to trading in this last year. So as far as like the smart money space especially has blown up a lot. So pretty dope year to kind of look back and be grateful for, and spend this next week and obviously having fun. Tomorrow's New Year's and everything, but kind of reflect and look back at like where you were whenever you started, because odds are it's gonna be pretty crazy. One fun thing to do is if you have any way to go look at old charts, like if you're in a Discord server that you've been in for a while, or if you have pictures on your phone where you've taken screenshots, or maybe you save them to your PC. And however you do it, I highly recommend to go back and just look at your TA, because it's really cool to see how far you've come. Like I'll get Snapchat memories of my TA from like 2.5 years ago, and it's crazy. Like the progress is crazy. So first off, here's the new year. Got some alerts. I got one on euro dollar. We talked about this rejection block on the 1 hour the other day. I'm probably not going to trade this. I don't think I'm going to trade today. It's day before New Year's, Friday. Kind of just going to roll out the year with some chill time. But for those, it doesn't seem like it's really getting too much of a reaction here. I mean, it got a nice reaction actually off of the rejection block right there. Didn't really hold that displacement under it though, so I think it'll probably make another high. I mean, it's going for it most likely right here. And I also got an alert for dollar CAD. Oh yeah, I tweeted about this. So it spiked the zone that I had originally watched. It went up in somewhere in here, but nonetheless, it reacted very nicely off this area. So looking at, and this is why I always like a sweep into the zone, and I want to sweep after the price has tapped into the zone, because just requiring a sweep, I think that is a rule that can be manipulated to your liking when you want to trade. So in this example, yeah, we got a sweep, but if you notice, price hadn't touched the zone. So I don't consider that. So what I would wait for is the sweep after price has moved in the zone. Now, some people may ask, well, what if the price, goes through the zone? Is it still a valid zone? Is it, worth paying attention to? A lot of times when we're using these last candles or these last little order blocks especially, there's usually higher time frame zones. Like for instance here, we tapped into a 4-hour order block right here. You could say there's probably another hourly order block. I wouldn't really pay attention to the hourly because it didn't tap into it. But there was a nice little reaction there. And then after you get that shift coming out, let's look. So I like using optimal trade entry if we get a nice swing like this. So you could just use this fair value gap. What I like is this range right there. And look at the dollar as well. And the dollar looks pretty bearish here as well. So that would support that. Where's the dollar CAD on this list? That would support a bearish claim for dollar CAD. I think these equal lows are a nice target. Pretty clear draw. I think there's a lot of longs going to get stopped out there. And then we have DXY getting very close to our weekly fair value gap that we've been talking about for I don't know how long now, but it's been teasing us for a while now, ever since really this whole month. So moving into the new year, we're going to be at a pretty key level for the dollar. If we can get bullish price action in here on a 4-hour, something like this. And again, it's the same ideology that I use to enter trades on the lower time frames. I translate that to the higher time frames, because all we're looking at is the occurrence of manipulation. So if we're trading off of a level that we're basically trying to more or less track mitigation of institutional orders, like order blocks, stuff like that, we're going to want to see manipulation in that zone. Now, I've seen other teachers use Wyckoff in this example, and really what it comes down to is we just want to see liquidity being swept. I don't go into depth with Wyckoff as much. I just want to see, we get a push in here, and then a sharp push under the first low, because that's where the early traders get in. And then after we take structure after that, that to me is smart money or institutional sponsorship. So I think that a lot of people that are learning to trade with smart money concepts, they see order block and they want price to just do this. And sometimes it will. That's fine. We talked about yesterday how XRP had done that and we didn't take a trade because of it. If you have tested data and say, okay, well, that works better for my trading plan to not require a sweep, then so be it. I'm not saying this is the only way, but I always want to see a tap in and another sweep. Now, it's not always going to be this picture perfect. It's not going to be that market structure shift, easy peasy pattern. Sometimes it's going to hit, and then it's going to go all the way around. It's going to consolidate. It's going to do this, and then it comes in and sharp pushes that low. And then you get that sweep, and you get the break of structure. So to me, both of these are very important. I don't want to just have the shift happen from the first tap of the zone. I can't stress that enough. And that was something that helped me go from a lot of unnecessary stop outs to less trades, but higher quality trades. And it also is a mechanical kind of rule that you can set that's going to keep you on the sidelines when you need to be. And it's not something you're going to have to kind of internalize I wouldn't think internalize, maybe not even the word. It's not something you're going to have to decide within yourself, it's either this did happen or it didn't happen. You're not going to look at it with some other smart money concepts and say, okay, well, maybe this is displacement, maybe it's not, maybe this is an order block, maybe it's just, you have your zone, price taps into it, did it take that low? If so, wait for the break of structure. If not, then you don't trade. So it's going to save you from a lot of bad trades. And sometimes you'll miss. And the most important thing is to not, if you try this new strategy out, don't, let's say if you start trying it out today and then you see price come into a zone and just go off of that and you say, damn, I knew I shouldn't have done that. That is such a losing mentality because you have to look at things in probabilities and as a series of trades. Because if you just look at it like, I'm going to try a new strategy and you try 3 or 4 trades and then one of them runs away from you and you switch back to your old strategy, that mentality is what's going to cause you to lose. Like that, you will never be able to be consistently successful if you base your perspective on a short number of trades or like a woulda, coulda, shoulda mentality. So I see that a lot. It's reasonable. I understand it, but you have to look at it like, am I thinking like a professional? And most of the time, if you really ask yourself that and you're true to yourself and you're not going to bullshit around, you're going to realize, I'm putting my neck out there way too often and it's unnecessary, So that's something that I can't stress enough. What's up, Chapo? I see you in here. What's up, Sardar? Great to see you too. Looking classy. My girl got me this turtleneck. Yeah, I've been doxing for a while. So I said finally a face to fit the voice. We've been doing it for like, I don't know, like 2 weeks. I got some lighting now. I don't know if it looks any better. My overhead light's not on. I got some of these, the loom cubes is what they're called. They're pretty dope. Actually, really nice. I got gold. Or was it? It wasn't gold. Well, there was something. Oh yeah, oil. This is a chart that I want you guys to pay attention to. It's something that I do analysis on a lot. I traded it last week. I don't think I went over this trade with you guys, but we can really quick. So what this was just a 15-minute trade. So I actually looked at it. I was kind of late. So I looked at it like, okay, we had this opening gap. So that's going to be an area of interest automatically to me. I always pay attention to those. And then if you have this order block right at the bottom, I wasn't watching here. I came in and literally it was in the morning right before market open. And I noticed like, hey, okay, well, we had a tap here. So if we're tracing the order flow, we came back down, took out this gap and traded in this order block and got a nice push off of it, right? So again, I'm not trading directly off this. I'm not really paying attention to lower time frames. I just know that the market did rebound from that nicely. So then I look and say, okay, I'm going to go, if I was in the 15-minute, then I'm going to hop down to a 5-minute. And I notice, okay, we came down into this order block and respected it nicely, right, on a 1-minute. And it was before the market opened. So timing was there. and I just longed based off of that 5 minute. I wasn't using a 1 minute confirmation, and then I was just basically using the 15-minute structure to target. And that's just a very simple trade. It's kind of asking yourself, what's the expectation that price is going to do? Because if we're making higher highs and higher lows, unless you have some kind of wall up here, which may be an order block or a fair value gap on the higher time frame, if you don't have that, the expectation is you're going to come down and you're going to put a higher low in and target this high. So as long as you have no external factors that are leading you to think that's not going to happen, you can look to get active and not complicate it and just trade off of that. That's why structure is the most important aspect of trading. Price delivery arrays and fair value gaps, order blocks, any kind of price delivery, they're important, but they're really useless if you don't understand structure. And you don't necessarily even need them as much as you think you do. And people overcomplicate things. The whole enigma mentality. But with oil, that same mentality that I am or that I was using on the 15 minute, I'm going to try to use in the 4 hour. So notice we do have this little zone right here. So that could be a problem. But the reason I'm not really paying it too much mind is because price is trading up into, we got a nice 3 drive into it, but we're not really holding displacement under these lows. So if you see, we kind of pipped this low, but look how it's reacting. All that liquidity is getting soaked up and price is pushing back up. So if we see a consolidation here and then we see some kind of push down just like this, where we just take the low and we just move right back off of it, say we consolidate for a little bit, come down and pip the low right here, and then move sharply out of it, I will look to get in some buys off of this 4 hour order block. So again, we want to see a really sharp reaction out of there. We don't want to stay there long. You want to see a 15 minute go pretty bullish pretty quickly, just like we saw here, right? So we came under that low, rapid push out of it. So that's a trade I'm looking for on oil coming into the new year. Be mindful, if you're trading oil, be extremely mindful of any news, because it can get super fucking brutal. And don't hold through like weekly gaps and stuff like that, because you can get slaughtered. Because the daily structure is bearish overall. We see this large impulse down, but I'm not really seeing very convincing price action yet on the 4 hour that we want to move down. We have these weekly equal lows that I really would like to take, but I'm not hell bent on that at this moment. Now, what would change my mind is if the 4 hour gets a nice displacement shift under any of these lows and closes under it, preferably leaving a fair value gap, and then we can start to look to trade into lows and target sell side liquidity. But until then, continuation until proven otherwise. All good, brother. Looking dapper. I appreciate it. What's up, Hamid? And price action on Bitcoin. Yeah, I haven't been. I think Ethereum's a better bet, but with Bitcoin here, yeah, this is kind of what I've been watching for on Bitcoin. Is a push down into these lows right here, or this low right here. I see a lot of liquidity resting under that, especially if you look at a daily. That's kind of like the nearest point that we move very aggressively off of. And then a push back up into this region would be nice. Now, this is a lot of forecasting. I'm not one to try to predict the future because, for one, I think that it can impose a narrative to where you're blinding yourself from what's actually going on. And two, without execution, it doesn't really matter. But this is kind of what I'm seeing. So now I'll take this away. But until I get one of these zones or one of these levels, I'm just not going to trade Bitcoin. And that's one thing that I think super important with crypto is, especially lately, these ranges will burn you out. If this is all you're trading, I mean, imagine if this is all you've traded, this has been almost 2 months now. And a little over a week, this will have been 2 months. And I mean, there's definitely trades to be had. We've taken trades on crypto. We took a trade from here all the way up to this high. But that was a very clear narrative. And now I just see another consolidation where I'm kind of, we've taken out the liquidity here. Yes, we have a daily fair value gap that never got tapped and buy side up here. But I'm not really seeing the displacement I want to see in order to get long. I'm just not there for me. So I want more sell side to be taken, maybe even these equal lows. The only thing about the equal lows that makes me a little hesitant is there was SMT. It wasn't actually equal on Bitcoin. And then if we have Ethereum. Oh, nice. Thanks for subscribing, man. I don't know. I don't know. I never realized that was my. I need to change that. It's like a fucking dinosaur. I'm new to Streamlabs. It's funny. I should make it a ghost. But see how we had this these equal lows on Ethereum, and then on Bitcoin we got a lower low. It doesn't really look like it, but it did get a lower low, very minorly. But that was SMT. So those lows might be protected if we are going to remain bullish. So that's why I was kind of watching this. Can I see the 5-minute time frame action? What would I call that pump? So this looks like a rate on stops on sell side liquidity. And if I was day trading this, one could maybe watch this gap right there. I wouldn't really worry about this gap right here. If it gets that low, I think you're going to go to the low. But again, you want to always, the 5-minute might show this, but then if we look at the 1 hour, look at this. Always in context of the higher time frame. So for instance, if I just look at this 5-minute, this looks bullish, right? But I need to know, okay, well, what can, I guess, what could counteract that bias? And it's just like any decision making. The first step is kind of like assessing the situation and like learning where you're at and then making the decision. So just because the 5 minutes saying bull or buy, we always want to go into the higher time frames and say like, make sure I'm very aware of where we're at. Is this a high probability trade? Because what I'm seeing now, I look at the 1 hour as I'm seeing displacement to the downside. So if we look, we're taking structure to the downside, taking structure to the downside, structure to the downside. So if anything, I think you're drawing towards this low because anybody who got active in all of this right here, they're getting stopped out right there. So that's where I would be watching for. Be this low, and again this low down here as well. But just because it's been the holidays and I'm not really a day trader on crypto at the moment, I focus more on indices. And so if you got the holidays, it's really not what I'm focusing on. So I'm not going to look for every single opportunity. And I'm not saying there isn't opportunities, because there definitely is. But it's not really what I'm camping around watching for, especially right now with the holidays. I'm kind of it's Friday. I've been out of town all week with my girl's family, and it's just not been the ideal week to trade. I did take one trade on Wednesday, or two trades actually, But yeah, I haven't really been very, very extremely active. So it's just a lower high on the higher time frames. Yeah, exactly. If I'm a day trader, one thing I recommend to you guys, like for instance, where I'm more swing trading and short-term trading crypto, I'm using a 4-hour and a 15-minute chart a lot. But if I'm day trading something, I'm using the 1 hour, the 5-minute, and the 1 minute more. So looking at this on the 1 hour, also, there's the so if you look to sharp push, actually, I think the move, if you were going to trade this day trading, one thing you guys can use the 830 open for I use it for indices, but crypto moves kind of similar to indices. So you can use this as kind of a barometer for what's premium or discount, right? So let's say you were coming into the market this morning and you didn't have a bias. Let's say if you're, or you weren't very confident. So we'll say you came into the market's about to open, and you're looking around like, okay, well, it's going to fuck us over and show us the candle. TradingView sucks for backtesting or replays. But anyways, you didn't know, okay, we have liquidity here. You've kind of mapped out the range. You say, okay, we've got equal highs here. We've got sell side liquidity here. So what I would do is just wait for one of these to be attacked and use the 830 open as kind of a barometer for premium or discount. So if you see liquidity above the 830 a.m. open attacked, and then you get a lower time frame reversal pattern, then you look to sell into the sell side liquidity, and vice versa. If you have the sell side liquidity taken under the 830 open, kind of look at that as a discount. So you're getting priced for a cheap, you're getting it low relative to that morning. So for instance, if you go to a 5-minute and you kind of just hang out. So let's say, okay, now price came under here. what I would do is watch the 1 minute. I'm not sure if it gave a nice opportunity or not. So two things you could do. I wouldn't consider this displacement, but really as soon as you got this closure, like if I was trading indices, I'd long something like this, but then your stop loss is pretty far, and the target would be just that opposing first liquidity. So this wouldn't really be a good trade in my opinion, and this is how crypto is a lot of the time, unfortunately, as far as the lower time frames for, if you're using time with price. But that's kind of what I would have used. Now you could have used a lower stop loss if you'd like some people may have used that. That would have given you a much more desirable risk to reward, but that's really the main way I would day trade stuff. So just a little insight on that. That's kind of what I look for in indices. Indices are just hanging out. Aussie dollar coming closer and closer to our POI. That's where I'll be looking for reversal. I will use the lower time frames to confirm it. I'm not just going to ape into it. But yeah, like we were talking about yesterday, everybody's getting burned up here, 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 because they're trying to short at a discount of a range, and then they're not using any context. So a lot of people just use a fair value gap incorrectly, and they think that just because price came into a fair value gap and it reversed, that we have to go down for all these lows, which is just not the case. You want to kind of identify where did price actually start to really push from. Where was the institutional sponsorship? So for me, I see this range up here, and then this right here. The reason I like this is because we came down into this low, and then we smashed through it, and also smashed through all this. So you see, where did the impulse really begin to do? Again, here, you could say that. I could see that, and this is where it gets a little discretional. But for me, this impulse, that's where, like right here and right here. Now, why didn't I choose this zone? Well, because it's not in a premium. Another thing you can use in terms of helping you select zones, actually I guess it wasn't a premium, but barely. It's not as in deep of a premium. One thing you can use to help you select zones is optimal trade entry too. So this was right above that 705, so right above optimal trade entry, and it's more of a closer to a invalidation. So for instance, if we don't get a nice push out of there or in this region, the overall idea is going to change, because what I'd posted about on Twitter was we had a 3 drive, meaning we had this push up, so 1, 2, 3 drives into our daily order block that is also in a premium of this daily range. So another thing too is we have this weekly order block. We didn't tap into the body down here, so we've got liquidity here, previous monthly low, a lot of pretty clear stop loss areas, where if smart money was intending to sell from up here, if that's their MO, then they're gonna have a lot of orders to pair with in this area. Also, let me see. Did the okay, it did. What's up? I just messed up. Do I think US 500 taps 3,300 next year? So let's do something fun. I'm glad you asked that. Sorry, that's a little late. That's not that bad. So let's look at SPX just for this. So this chart, yeah. So let's look at SPX in 2008. And to answer your question in short, I definitely see that happening. So if we are to see something like this, now this is going to be heavily reliant on the Fed's position. There's a lot of things the Fed can do to combat this from happening. I mean, I'm not much of one to trade off of economic predictions, but it's not as a lot of people think, where we're just destined for complete carnage. I'm not saying we're not going to have carnage, but there's a lot of stuff that can be done to kind of cushion those blows, so to speak. But this is the 2008 fractal. So if we look, it's not spot on, right? We have this push up right here. We didn't get, I would say this is more accurate there. So the timelines are a little different, but you can see that they're very similar. Now, if you notice, we haven't had this much of a push yet. Like we haven't had the big death crash, so to speak. A lot of people think we have. I don't think this really, I mean, it's bad. It's definitely a market crash. And a lot of tech is down massively. And I'm not saying this we're just going to dump to the heavens from here, or to the depths of hell from here. But when I look at these charts, let's look at ES on a monthly chart, or actually, we'll go back to SPX. On a monthly chart, if we look at the institutional order flow, like where we really pushed off of, and we have this monthly on the order block on from COVID. Then if we look right here, I think we have a new range we're kind of playing within. It's going to be right here. Oops, wrong tool. This is kind of the range I think we're playing within right now. Is at 39 and 33.85. This is for SPX. It might be a little different for ES, but yeah, I think that we're due to come down deeper into this. So now if we look into a weekly, we could have looked at this big up candle as the beginning of a bearish order block. That's kind of too early to call because we haven't engulfed it yet. But price is showing bearish indication at this moment. So we've got lows down here. Got a weekly order block. So like this is what I like to do with those monthly levels. So if we look here, and this was the monthly order block. So if I want to refine that, I can look, okay, well, let's go to a weekly. So I'll draw this, right? Make sure I can see it and everything. So then that's on a weekly. Also, you look, we have liquidity right under it. That's pretty close to your level of 3,300. And if we want to go even deeper, we can go to a daily. And you can even go down here, right into that order block where that big gap is right there. So you can see how you can stack these levels in order to get more of a precise area. And also notice how, again, it's right under that monthly order block. So I think this would be a very highly, it'd be likely to bounce from here. And if you go again, you've got that monthly order block just under us. So, that massive COVID order block. So what I would see most likely is kind of consolidation here, just another push up. And then now we get back into these areas. And, this wouldn't surprise me if we took out COVID. Now that would be crazy. I'm not saying we're surprised on 2200, but I could see it. I could definitely see it. I try to play more like stepping stones and say like, okay, from where we're at now, in the weekly chart, I would say there is a possibility we take out all these highs right here. That would be the ideal move and trade up into this order block or this volume imbalance right here. So that would be what I'd like to see, and that would give the highest probable short entries. But after that, I see this low getting taken. Now, the only thing that will switch that for me is if we get displacement above that high from August, before the Jackson Hole, before the real carnage started to happen. I guess that I wouldn't say the real carnage, but, and we talked about all this. Those of you guys that are newer, on July 6th, you can go on the YouTube and watch the video that I put out about the markets recovering. And then all through the streams after that, we talked about these equal highs right there. You can see price move right up off of them and right back into the lows, just like we anticipated. And I even thought that was a little crazy at that point. I was kind of like, I didn't want to come out publicly and say that, but that's what I thought. And a lot of times you have to trust the chart, You can't. There's so many times in my trading career where I've said, oh, this is crazy. Like, that's not going to happen. But it happened, So don't ever doubt yourself. Don't ever doubt your TA, no matter how crazy it looks. Like, for instance, with Bitcoin and Playboy, we've been talking about 15K, me and Playboy, for I don't even know how long this monthly fair value got. Or not 15, what was it? 16. It was on, actually, I think it's on a different chart where it's like 16K. Yeah, it was in this area. Or no, it's weekly, not the monthly. My bad. It was down into, I don't know what chart it was. I thought it was 16K, but we've been talking about this fair value gap for some time. This is back whenever we were closer to 25K in these regions. So, and that sounded crazy at that point. Everybody wanted Bitcoin to go up higher, and it just didn't work out that way. So, don't ever doubt the charts. Your coffee is in the... Oh, it came? Hold on 1 second. It's on camera. But nice. Got that new blazer. New blazer. Hell yeah, that's nice. Your coffee's in the fridge. Yeah, I'll throw it over here. At the New Year's fit, getting ready. But what was I gonna say? Can't remember. Oh yeah. Or no, that wasn't it. Oh, I don't know. It's gone. If you guys have any coins or anything you want to go over, don't hesitate to throw some in the chat. Rune. So no dice. I think it was a 4-hour zone. Actually, it did react kind of nicely. It just didn't go up as high as I'd like. Back in this zone now. 1-hour zone. Yeah. Let me. So, yeah, the swing structure that you're operating within is pretty wide. In my opinion, I'll be looking at all this. So I look at it like, okay, well, what reason do we have to go higher here? Because we're in a bearish range. So I like, actually, I'm gonna delete that. Delete this. So we're in a bearish range where, you know, here's our external buy side, here's our external sell side. We came up, we filled this fair value gap right here with this price action. And we also traded into these buy to sell wicks. This is another way, we talked about this yesterday. And those of you who've been in the Discord have heard me talk about this strategy before, but a lot of people I see with ICT don't know some of these strategies because they've only watched the newer stuff. But if I'm really tracing the order flow here, I see, okay, price went. Whenever we took structure, right, because here was our first low we took. Right, we took it, what happened? We traded back into this order block. Then what happens? We take structure again. Okay, what happens after that? We trade into this order block. So then a lot of people look at this and say, okay, well, I'm just watching the fair value gap because there's not a clear order block. But you have to remember that price is fractal, and I hate that fucking saying because it's overused, but it's true. So we look here, we have every range we have that's an order block. It is a buy to sell range, meaning price moves, it buys. So that's where you get those up candles, and then it sells, taking structure. So that's why we use up close candles, because it's a buy to sell range. And if price is bearish, smart money is going to be selling the up moves. That's why we see bullish candles and a bearish trend as support, aka order block. So if we have a buy to sell move, just because it's not a blue candle on this time frame doesn't mean we can't go into a lower time frame. And I don't know why it's not showing on the hourly chart. Oh, it's because I was not in the right spot. But if you look here, look at that. Nice zone right there. That 1 hour. And that's 4 hour, 1 hour, however you'd like to look at it. It's a high value zone. So if we go back and look where we reacted off of, it's right here. So then I look, okay, you know, what was the last candle? We could even use the last group right here, to be honest, before we had this push down. So this is what I've been waiting for, because we're now, in my opinion, we're seeking out stops on the sell side. So you've got lows here, here. All these lows can be targeted, right? You've got imbalance there. So we're looking at this as kind of our dealing range that we're operating within in the bigger picture. Just look at, if we're shorting from a premium, you can look at imbalances or liquidity, really imbalances or liquidity, but imbalances or lows to target in the discount of the range, or this down here. Now, this is going to be the overall target. Now, we do have some areas that we could still come back and trade. Yeah, I like this because look, we have a high resistance run on liquidity. Price comes up into the zone, taps it. Then what happens? Nosedive. So we didn't get all the way where I wanted to. Seems like that might have been a nice zone. But now I'm kind of just tracing the order flow again. What I would wait for here is a liquidation of all this up here. So whenever we have these trend confirmations, oh, what the hell's going on? You know, price is kind of moving up, and we're in this uptrend. and we change, right? After we change again, a lot of people want to trade from this order block, right? Because they're trying to follow the trend. Now, what I like to do is wait for that second break of structure. This just gives me more confirmation of the overall trend that it's moving down now. If I can click, that the overall trend is moving down, seeking out all these lows. But I'm not necessarily going to look to trade off of this right here. Oftentimes, guess where everybody, if we're looking at this from the perspective of where did the big people get involved, where are the first sells, so to speak, it's going to be in this range right here. This zone right here is the important range you want to watch. Now, why not all of this? Because quite frankly, you could miss a trade, might come up here and then move down. But the way I look at it is this is where all the trailing stops are. So there's going to be a ton of liquidity up here front running these unmitigated zones. So the way I take this is, okay, I'm not going to trade here as far as to swing short. I'm going to wait for price to cut there. Now, if it doesn't come there, that's totally fine. Miss out on the trade, whatever, for a swing opportunity. Now, if you're kind of day trading this, so to speak, I would look at this like you just took out a low. What did you trade into? You didn't trade into that fair value gap just yet. I would say it's probably going to make one more low. I see this as like a little impulse move down. So we can look at this on a lower time frame, like a 15-minute. This is kind of your current external structure in a 15-minute. So you could see this price action looks awful as far as just like the actual candles. Looks super illiquid. It doesn't sound like I wouldn't be day trading, but you probably got this whole region you could be watching for bearish price action to target that low because you're front running that fair value gap. So you've got equal lows relatively. If we go back out to that 1 hour, you can see right here. So I would be targeting that low in that fair value gap. But after that point, you might start to get that retracement that we would need in order to get into sells. So that's kind of how I would trade it. I wouldn't force into it. And like looking at XMR, it was similar, right? But if we look, this is where that first big push happened that hadn't been mitigated. Because if we look up here, at that time, we'd already traded into this zone right there. So that little last buy to sell. We traded into it. Okay, buy to sell, right? And then we use this with the lower time frames to get higher risk to reward. It's funny, it's got so close to getting break even, but I mean, it's barely anything of a position left anyways. It had already hit all three of the TPs. Take a look at ETH. Oh yeah, and you're awesome too. I appreciate it. I'm glad I could help. What are the possibility that it's still a bubble? Are you talking about like crypto or just like the world? Sorry, I don't know what time that popped up. I didn't see it. Is it possible for you to help summarize ICT's recent tweet about fair value gap? Let's take a look because I have no idea. I haven't even seen it. Trying to find what you're referring to. Okay, maybe this. Notice how the fair value gap are acting like actual support and resistance. I think he's just saying that. God, I hate Raid Shadow Legends, but think he's just saying basically that fair value gaps are better than support and resistance. I'm not sure if that's what you're talking about. So hopefully, I'm not sure if that's not what you're asking. Let me know. So Ethereum, still waiting on a sweep of this low. So if we get a sweep of this low right here, so push under there and then a break of structure, that's what I'm looking for. Because again, we have this order block right there. Oops. Order block right there, and we've tapped into it once, but I want to sweep. Now I might not get that. If I don't, no trade. Now if we get price moving around all the way up here, and then I get it, and then I get the structure, there we go. Same thing. I'm gonna look to trade here, and then take it up into these equal highs. Now that's low hanging fruit. Overall, I'd like to see this daily break or 4-hour breaker block right there. And this is clean ass high resistance front on liquidity. This breaker's already been mitigated right there. So I see right there, let's bring it down, back up, and then down. Thanks for subscribing. Appreciate you. So yeah, for ETH, I would be patiently waiting. I am patiently waiting. Gold. So gold overall, I think is going to move into this high just because this lackluster push down. You know, we got a push up above these this high over here, these relatively equal highs in the lower time frame, and we had a nasty reaction off of it. We didn't really take much structure displacement. You know, yeah, we barely got under this low, but we couldn't even close a candle on it. So, you know, lack of displacement down, more up. So, also traded right into this volume imbalance right there. So I would say the draw on liquidity is this high right here. So that's what I'd be watching for. Now, if you were trying to actively trade that, you could hop in, and if you establish your higher time frame draw, now you could use the lower time frames to try to trade it. Oh, it did. Damn, I didn't have a fucking alarm set. What was? Oh, it was this. It was a 5-minute candle. Yeah, it was. We talked about that yesterday on stream. Damn. RIP. Well, it reacted pretty nicely off of it. Came back down into. I probably want to trade it anyways. Kind of tracing the order flow here. Yeah, it looks good. My gold looks good up to this high up here. That 1841 on CME futures on a continuous contract. But that gold up more up, in my opinion. Also, for you gold guys, really watch DXY, because DXY and gold, I mean, yes, DXY works great with any USD pairs, but really with gold. Like DXY, the dollar strength is very important for gold. So if we look, we see the dollar is drawing down into that weekly target we've had for some time. So we can say that, okay, well, if I already think that gold's drawing up, and we know that the dollar is drawing down, then, you know, you have both confluences where you can be a lot more confident. ETH, we just did ETH. Shubram. We just did ETH. Okay. Adaliki said he made a thread on ES fair value gap. Then he marked the H4, H1, and M15 fair value gap. He was trying to explain the reaction of price going into it. Posted a chart. If you post a chart, I'll just do media. Was it this? That's a video. So I'm not sure. Let's see this right here. What I would say so far, just looking at it, it's just refining fair value gaps. So we've talked about this. I actually have a video talking about think which zones to trade from. I can't remember what it's called, but yeah, so he's just starting with a big 4-hour fair value gap and then marking out where the discount of that 4-hour value gap, 4-hour fair value gap is on the other time frame. So like for instance, let's go to ES on like one of these massive. So like with ES, let's do this. So if we had trying to find a good example of this. Okay, let's start with a weekly. So let's say back in August or before August. So let's say we start out with this right here. So if you have this massive fair value gap, okay, well that's cool, but you probably do a little bit better in terms of refining that down. So if we take a fib and draw it on that gap, we can say, okay, well what gap is in a discount or a in this example, a premium. So then you could take that zone and say, okay, well, I'm going to, you don't have to just get rid of that zone, but you could maybe draw a new one and say, okay, well, this fair value gap, or you could just draw the beginning of the line like he did, right? Like that. Say, okay, well, there's that. And then, if you're on a daily, go down to like maybe a 4-hour and see if there's anything in there. So it's really just refining gaps. That's what I gathered from it. And that's something you need to do if you have a massive gap, such as something like this, because if we're looking to trade profitably, we need to be at least semi-precise. You don't have to be sniping tops and bottoms, but you can't use a massive range. Now, I'm using the weekly, daily, and 4-hour for an example. You could use the 15-minute, 5 and 1 minute. You could use the 4-hour, 1 hour, and 15-minute. It's just translating concepts throughout different perspectives. So any analysis can be done on multiple time frames. Well, all analysis should be done on multiple time frames. It's gold to sell now. We just went over gold. You guys, it's funny, you and Raj both came in right after we went over what you asked. So gold, I would say, is a buy. Actually super clean price action here. Order flow, if we notice bullish order block right here, trades into it, right, trades out of it, brings structure, trades right here, comes down again, pushes back out of that bullish order block. So we're just watching order flow. So, we established that the 4-hour, we look at 4-hour, it's bullish structure overall, right? We've got high, low, and then we come up, we failed to close above that. So that could be looked at as a bearish indicator, but if we notice what happened when we came down at that low, we couldn't hold under it. So lack of displacement down, more up, so you're going to just target buy side liquidity. And you can target like highs along the way on the lower time frames. For instance, if you were a trader in here, let's just say you traded right there, all you had to get was that. You don't have to get more than that. You don't have to always target the massive end game target. You know what I mean? You can just trade with the order flow. Like for instance, let's say if you traded in here on the lower time frames, you could have taken it right there. So if you traded right here, you take it right there. Or if you trade right here, you take it right here. You don't have to get every last pip in order to make money. Oftentimes you make more money getting in and out, but it can be a little more difficult. So
principles.
well, I'm probably going to go ahead and wrap this up, guys. As always, I really appreciate you all coming through. And like I said at the beginning of the stream, just take some time to reflect and be thankful for how much you've learned this year. Even if you're not profitable yet, even if you just started, just be, pat yourself on the back for kind of scratching into the space, getting far enough to find really good teachers. I try to do my best. There's a lot of other people out here doing stuff. Sorry, guys. And, just don't forget to be thankful, reflect, ask yourself, what could I have done better, and what are your goals for this new year. So I think as a trader, you really should set some goals. Maybe it's being funded, maybe it's increasing your what you're already funded if you're a funded trader. Maybe it's to become profitable. Maybe it's to start trading live. Whatever it is, just set goals with times, because if you don't have time, you're not going to hold yourself accountable. I recommend at least quarterly goals. So, and that should be with everything, not just trading. But anyways, Happy New Year, guys. Be safe. Go hard, but don't go too hard tomorrow. And I will see you guys on Monday or Tuesday. Actually, Tuesday. I'm gonna upload some videos. I was gonna upload a video today or yesterday. I think I'm gonna wait till after the new year. So there'll be a market maker video coming out soon. I appreciate each and every one of you. Happy New Year. Those to you that are in the private Discord, I will see you tomorrow for our class. If you're not in the private Discord, you can use the code at the bottom of the screen at the link in the description to get a free trial. Or actually, I forget again. You could use code FREE, all caps, just FREE, to get a free month at Playbit. And that link is in the description. So hopefully I see you guys in the class tomorrow. And if not, I'll see you on Tuesday. Peace.